Hi everyone, welcome along to another edition of our monthly Market Watch. Christmas is almost upon us, so we're going to take a look at which markets we can expect to see moves as we run into Christmas, over the holiday period, and of course into next year. We're going to focus on our stocks, number of currencies, and our energy sector. There's a number of interesting setups. I think we can see nice moves in across those markets. Best place to start, of course, is going to be our stocks. Going into the end of the year, run into Christmas, you'll have I'm sure you've heard about the Santa Claus rally. That's basically when we all go out and buy lots of things we don't really need, and big business benefits from it. So what we tend to see is a lot of stocks rally heading into year end, or actually, to be more specific, just actually up onto Christmas. Just this run, we've had a little dip as well. We've had the little dip. A little phase two across especially a lot of the US markets. We're seeing here, we've had that little dip, and now we're just starting to see signs of that run up. And what we typically see is a run up just up in here into Christmas, and actually between Christmas and New Year we tend to see a little bit of sell off, most likely just driven by a little bit of profit taken as we head into year end. And that tends to be the same running across the number of the major US indices. We've got the Dow Jones here, the Nasdaq, and the Russell as well. So the picture is quite similar. So we'll be looking for continuation of those. If you're not already in those indices or some of the individual stocks, sectors like our tech and banks, financials, and healthcare do well around this time. So if you're looking to get into anything just between now and Christmas, that would be where I'd be looking at. Over on to our currencies. What we tend to see actually is a little bit of a dip just the beginning of December, beginning of the month. We've just been seeing that actually, and then what we tend from the middle of the month to the end, we tend to see a bit of a rally again into year close. We've seen that in Aussie. We've seen that as well. We've seen a little bit of a dip on pound. It'd be nice to see a little rally on that. Same with CAD. We've seen a little bit of a weakness at the beginning of December. With that would be nice, and also Euro. We tend to see a little bit of a rally towards year end, and Kiwi's another interesting one that tends to follow that pattern. So that would be what I'd be looking for, is somewhere around, hopefully getting into this week actually, if we can see a little bit of a push to the upside. Generally, just if sentiment can improve, likely be driven by if we can see continuation of strength in our equities, just for sentiment to improve broadly across the market, and see about what's known as what we risk on, and we see these markets rally to the upside. What is to be mindful of, though, I think, is, well, it's actually into the new year, so it's very easy to see. Forget about what's over here. Actually, next year, not that far away. Actually, what we tend to see is a bit of weakness. I'll obviously be out with a new video at the beginning of January, just to be aware of. We tend to see a lot of currency weakness at the beginning of January, because that coincides with our equity weakness in January. Okay, so be mindful of that. In our energy sector as well, one I want to be looking at is crude. Again, we tend to see very similar movement, very similar to what we've been seeing in the currencies and our equities. Crude hasn't been performing seasonally. Actually, you would expect to see weakness through October, November. We haven't seen that actually. We've seen crude performing quite well. But we look like we could be coming towards that period where we see a bit of a dip in crude, and it'd be nice to actually see that dip going into next year. Okay, so that's what our seasonal patterns that we have historically seen and what we could be looking out for, and some of them, especially in our currencies and equities, seem to be following that pattern already as it is. But let's have a look at our COT data to see what positions are actually live in the market at the moment, to see what the likelihood is of those patterns continuing. One we start here is with the pound. One massively in the news at the moment with everything that's going on with Brexit. And interestingly, actually, so we know the seasonal patterns, we tend to see a bit of a rally towards year end, a bit of weakness in the new year. I think actually looking at the positions, that's very, very possible. You see commercials with all the what's going on with the Brexit talks, etc. They're actually coming out of the market. They're not selling. They're holding their shorts stable, and they're actually they're cutting their longs. So they're actually leaving the market. Well, what you actually see is the speculative side piling in, and it's very interesting. They're hedging each other. They're increasing longs and shorts at the same rate. So they're anticipating there's a possibility of a rally based on the outcome of Brexit talks before Christmas, but they're not certain of it, and you can see there with the increase of the shorts as well. So they're hedging that move just to make sure they're not exposed. So basically, they want to make sure they catch a rally if they get it, but don't get exposed just in case they're in on the wrong side. So basically, looking at that, I think we could be looking at a nice little rally driven by that speculative burst, thinking of a move to the upside going into Christmas. Another one, our euro data is looking very bearish at the moment. Actually, we're not seeing speculative buying here. It's actually staying very, very flat. The money flowing into this market is actually on the commercial short side. They've built up a huge short position here on the euro. In that last rally, just that last little push just here, they took the opportunity in those few weeks of a rally to really build into a fairly significant short position. It doesn't mean we're going to actually just turn and fall just yet from where we're at. You can see we've tried to already with the weight of that short position coming in. What I would like to see is that the sentiment in the market just improve long enough, maybe push back up into that level of resistance around that 121 towards year end. And if that was the case, I would be happy to look for a short then into January. And I would expect to see the short position continue to increase and around there. So I'm not looking for a short position in this just yet, but I think year end would be a nice point for the euro to look for a move to the short side, especially, or even take some profit if you are long. Kiwi as well, very similar picture. We're seeing possibility of a short rally from where we're sitting at the moment. Commercials buying into Kiwi at the bottom of the range that we've been in. Similar levels, similar position to what we've seen at the bottom of this before. Similar level of buying as well, actually slightly higher. And non-commercial speculators are actually starting to leave in the short side and start to buy into it. So I think, yeah, there's a very good possibility we can see a move to the upside on Kiwi, and that's what I'll be looking for going into next week and running into Christmas. Let's say as well, our last market, crude oil. So we take a look at that. I had been earlier in the year looking for a move up to get short and around here, but we didn't see enough selling coming in from the commercial side. They stayed very, very flat. So I never looked for that short entry. Interestingly, what we have now is this last little push. They've definitely seen a big accumulation of commercial shorts. We can see the index at 0, which is a bearish signal to begin with, and we can see why it's at 0 is because the shorts have increased to that significant level. It's a new high again. And they keep building up every time with a little push to the upside. They use it to buy or sell some more. Whereas on the other side of this, the flip side, speculators, they're actually getting tired. They're getting a bit nervous. Up here, you see the long positions. The trend followers have been buying into this as it goes up. You see they're getting a little bit nervous and they're starting to just cut that long position that they have. So with a similar pattern to the euro, whereas the commercials seem to be taking more control of this market. So a nice move to the downside from here would be nice run through Christmas into January, because ideally actually I would like to be getting long somewhere into end of January, February, and that's something we'd like to be talking about in those videos. So that's I think where we're at the moment. The stance from here through to the end of the year is looking for a continuation of equity strength running up to Christmas. Look to take some profit before Christmas if you can, if you're in a position to do so. Same with the currencies. I think things like our Kiwi or our Aussies or euros, even our pounds, I think we could have a nice little run just into Christmas and the year end. We'll obviously wait for price action because none of them are looking particularly bullish just yet, but I think it's certainly possible. And then if we're looking for a potential short entry in crude, with the mind of actually looking to get long early into next year. Okay. Also, just want to bring to your attention before we finish, keep an eye out. We're in the process of putting together our market forecast for next year. So that'll be out early January, so keep an eye out for that. And a lot of useful information that you can keep to hand. It'll be a download PDF, so a very useful thing to have around as a reference. Okay, guys. Well, that's last video of this year. Enjoy your Christmas and New Year's. I'll see you early January and we'll start over again. Hopefully we'll have a nice profitable 2018. Okay, take care.